Hey, I'm here with Tiffany Teradash. She is a mortgage expert, and all the questions we have about the interest rates, and they keep going up and they keep going up. How are you finding solutions for our buyers?
Well, I do have a little bit of good news. They are coming down slightly today.
Oh.
So we were excited to see that today. But in general, we need to get really creative.
Yep.
We've been getting creative with the numbers and with, of course, buy down dollars from the seller and maybe a little bit from the buyer as well. Yeah. So the thing that seems to be working to get that interest rate down to the levels that we all are hoping they are in, let's say the 5s, maybe low 6s, is what's called a 2-1 buy down. The 2-1 buy down is a temporary buy down. So it's used from the seller's money, okay? You cannot use it from your own money. It's from the seller's money that is used to take that interest rate from, let's say, for example, 7.5 down to 5.5 the first year, 6.5 the second year, and 7.5 the third year. And it's a 30-year fixed locked-in interest rate from the 3rd to the 30th year.
I see.
It's a little confusing, and it takes some coaching and some educating to the buyer and the seller on where that money comes from and how to negotiate a purchase contract, including those funds.
Yes.
So instead of negotiating maybe a little bit lower price, you would go in maybe at full price, even maybe a little bit above, as long as the appraisal will come in, and then ask the seller to then give you that money back, difference between what you want to offer and what you actually offer, give you that, let's say, for instance, $50,000 back towards your rate buy down.
Yes.
So you can do the temporary, but you can also do a permanent. So that rate can also be bought down in the 5s and 6s forever, not where it moves the first couple years. So there's a lot of great features you can do it combined too. So
what we just did is we negotiated $10,000 above what the offer was for my seller. They wanted closing costs, and so we went $10,000 above where we were already listed and gave them back the $10,000 to get them their closing costs and a rate buy down.
Right.
So it was really effective.
If you do that, the dollar for dollar difference, so by you raising that $10,000, that only was a difference in the buyer's payment of about $65 a month.
Right.
But that $10,000 went for dollar, saving them that money in closing costs. And if you used it towards rate buy down, that same amount of money is going to save you pretty much double, if not a little bit more than double, towards rate rather than towards purchase price or loan amount.
Right.
Does that make sense?
It does.
Okay.
So we get creative. We get you into your house. If you're in a higher interest rate and they come down, typically they can just refinance, right? And
Absolutely.
If they refinance, then the rate is lower, your payment's lower. Some of my clients even got money back from doing a refinance when the rates did actually drop. So
going back to that temporary buy down, if you do refinance within the first 2 years, that money that was used to purchase that buy down, you actually get it back to you, even though it came from the seller. So that's really cool.
See?
A lot of people don't realize that. You get more money than from the seller, and it goes towards the principal reduction of your loan amount, or can pay for a refinance, or can buy down the interest rate. Let's say if you go to refinance and the rates are at 6, you could buy it down to 5 possibly.
Yes.
So
awesome. So we get creative. We get you into a home. If you're paying rent, you're paying 100% interest. You've heard me say it before, 100% interest, and someone else is getting the equity. So let's get you into some real estate. Let's do it.
Let's do it.